Good morning, everyone, and welcome to Nadex Morning Analysis. It is March 24th, and we are going to take a look at a couple of hot spots or potential hot spots in the markets today, particularly with a couple of events happening this morning early. So we'll have to keep our eyes open. Before we jump into it, my name is Todd Rich. I am with Nadex, and with me from Keep Trading Simple, Brian Caprice. Before Brian and I jump into it, we do need to share this, that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything we say, either Brian or myself, as a buy or sell recommendation. We are doing this for your education purposes. All right, so the two things that we're really going to look at today, one, we got Powell testifying today. So this is not prepared remarks. It's at 10 a.m. Eastern. So he is actually going to be testifying. Don't know what the questions are going to be. We'll see if anyone throws any curveballs at him or if he mishandles or says anything surprising during his testimony. So with that, we'll probably take a look at the NASDAQ, been one of the indices that's been moving around. And then we're also going to talk about oil. Got crude oil inventory report coming out at 10:30. So at 10 a.m., Powell starts talking, 10:30 oil inventory report. Could move equity markets, could move the oil markets. So Brian, let's jump into what Powell's talking about and maybe the NASDAQ first.
Yeah, I mean, obviously he's testifying, so I don't know exactly what he's talking about, but I do know thus far what we've seen this morning, and these are numbers that we talked about yesterday, was watching the German CPI numbers, not the pound, the UK CPI numbers, that it was a year-over-year total, and that is one of the mandates of the central bank. It came in half as high as expected. It was supposed to be 0.8, it came in 0.4. As you can see, pound dollar down 83, pound yen down 70. So quite a large bit of movement. Since that time, we've seen a lot of services data come in. Now, the euro is down right now. And part of the reason is because, at 47, it's still showing contraction. 48, still contraction. The biggest kind of highlighters in here is Germany. Germany was really getting beaten up. One of the nice things about services, I don't know if you guys can see where the highlighting is going right now, but Germany actually bumped above on its flash services, which is, again, like restaurants and, salons, anything where there's actually some type of a service provided, not just like a grocery store where you go and buy something. That's where the services comes in at, and it's coming in above 50, which means they have an expansion again, which again is good for recovery. And then their manufacturing numbers were great. Supposed to be 60, it was 60.7 before. Supposed to be down a little bit, came in at 66.6, so much higher. Yesterday, and again, they're the main driving factor for the European Union. This is what we talked about yesterday. Merkel talking about how we're in a serious situation. It's exponentially rising, British variant. And then today, this is the news we see. Germany,
isn't that logical?
I mean, yeah. I mean, it plans to drop its 5-day Easter lockdown, and same thing. Because it is doing so great, it's starting to boom, everything's starting to go crazy. It's like, wait a second, how in 24 hours has everything just been suddenly solved here from very serious to, woohoo, no more lockdowns? Nah. I don't know. It's just one of those things that's you always got to watch the headlines because they really provide they provide catalyst where everything's going to go. But this morning we have our U.S. manufacturing numbers at 9:45, so it's kind of it's a little bit more, I'd say, riskier open. Because we have the data we've seen thus far. We have the open where retail traders jump in. Then we have manufacturing numbers, which, again, all eyes are on manufacturing because that's a sign of recovery. And then, bam, 15 minutes later, Powell speaks. And then 30 minutes later, we have crude oil inventory. So NQ is going to be a little bit crazy today, I think. We are kind of exactly where we were if you attended the 12 p.m., the noon session yesterday. This is where we were yesterday. This is where we are right now. So we're in the exact same spot. What did it do? It came up to the level and grabbed that small level at the 11 o'clock time frame that we talked about. It literally, that was the turning point. It came down. It messed with the zone down here at 13,000 like we talked about, and has now rallied all the way back up and almost, it did touch, I don't know if you guys can see this or not, it did touch one more time right here, and this would have
Yep.
been at like a 5 o'clock entry, back down again. So again, is it the freshest level here? Not so much. It's now been touched twice since our last presentation, and then again, the 13,000 level, it came through. It spiked down to about 12,980-ish. Stayed within that frame, and then
Yep.
literally rallied back up. So, we mentioned yesterday looking at the kind of 5 to 6 o'clock print, right? When the Nadex contracts were going to be re-put out, I mentioned to you guys you should be looking for call spreads or even maybe potentially binaries to see if we were near any of the floors or ceilings, at least of the call spreads of the knockouts. Well, that literally came right back down to the same level. So it was a nice rally if you guys were able to take advantage of that. And that's why looking at 6 o'clock is always a great time to see where those new printed call spreads technically are. Now, right now, I would say, this is once again, here, I'll put the arrow there just so it's easy to see. We'll do this arrow today. Right there where the purple arrow is, big enough to everybody see. That is the European Open. So once again, we have crazy amounts of movement off the European Open, and now we are starting to see it kind of channeling. Now, this is a 15-minute chart. These are the ones that I like to look at for the Opens. It's already starting to channel and grind its way back down again. Technically, by the parabolic retracement rules, we should be looking for a retracement. Again, a lot of movement, one direction, very little wicks, came right back up and grabbed the zone that we know that was tested in the past. Now, it did hit at 5 o'clock, but the original zone was formed at 11, so it's a valid zone. And we had confirmation. So for right now, I'd say I'm probably a bit more bearish. Again, 945 of that manufacturing number does not come in as high as expected. It is supposed to go up to 59.6. If it doesn't come in that high, we may run into something, as well as Powell testifying. One other caveat today as well, if you look into the news, and again, we did mention this yesterday, that China and Russia have now joined forces, and they have agreed that they're going to remove the U.S. as the world order. And again, we mentioned this yesterday, where it's a very, it's a very thin line between being strong and being, the relationship is weird, right? And again, China has a very well-defined set of guidelines of what they're going to do to become the global economic power. They're very clear about it. I mean, literally, it's printed on a website. They'll tell you exactly what they're doing, and we've been kind of playing catch-up. And now a lot of the statements and things like that are going directly kind of like, hey, listen, let's join forces and make it happen even faster. So we have to be prepared for this in the markets. And like I said, things like this, Powell speaking today, like I said, Powell's one speech about, I want to see actual recovery, not forecasted recovery, is one of those things that still sits in the back of my mind, because that's a very pointed statement.
Yeah, that is indeed. All right, I just want to take a look at the Nadex platform quickly. Something that I thought was actually kind of interesting is this level up above, which is around 13,165. 170, 1360, 13,170. It actually is one that goes back a week. I mean, I love it when I pull up the charts and things that we had actually spoken about. And it has actually been a level it's been a challenge for it, for the NASDAQ to get through to the upside. And then that 13,000 level below, we've talked about that too, where it's not just a double zero, it's a triple zero level. It's a psychological level. So while we've been channeling in here for the last couple of days this week, and there's been some great trades in between, again, today, that spike up during the European session, seeing a drift lower, something to keep an eye on. But then again, anything goes when Powell starts talking, or we start getting some actual economic activity numbers and people interpret it. So binary options, probably a way that you can try to play this. And if you're going to try to play from the short side, to begin with, Brian mentioned he's a little bit more bearish. There are some binary options where you could take a bearish position. God, I'm really going to have to open this up to really see all of them, where you could take a bit of a bearish position, and if it were to drift lower, these probabilities would go down. Again, you don't have to wait until the end of the day to see what happens. All these are going to go to 0 or 100. If you were to take a bearish position on one of them and they were to come down in price, you could always just buy them back, close your position, and take a profit. Thank you very much. So one thing to keep an eye on, the NASDAQ. I know we've got a few more minutes here. The other thing, we've got oil inventory reports.
Yeah, we have oil inventory. Yeah, we have oil inventory coming in at 10:30. The forecast on it is a surplus of 1.4 million, or an increase in supply of 1.4 million. We did get some API data. Remember, that comes out on Tuesday, and API basically reported that we will have a build in crude oil inventories by 2.9 million barrels this week. It had predicted an inventory build of 272,000 barrels. So the API is predicting that this is going to be a green. Again, their version of it is the green number. This is the EIA, so a little tiny bit different between the two. And again, they're expecting, what I say, 2.9, and this is expected at 1.4. So, it could be another one of those situations where if this is, positive, higher supply could be a rollover. Now, oil, what we talked about yesterday, and again, the yellow circle is where we were. I mentioned it coming down and seeing if we can get to oil inventory before the news. It didn't take very long. It escalated very, very quick. It took about an hour, and it went down to that level and started basing in it. And again, we can see the basing level right down here. We mentioned that there was a 57.26 in there. It literally came right down to that exact level and ended up hitting it. Rolled, and then really the European session again, I'd say about 2 o'clock, this one was a little bit early, has taken off, and now we've kind of got, kind of newer highs that we're kind of dealing with, selling here and selling up in this level. So, it is about an hour and a half early. There's a manufacturing number, and there's an open, and there's a PAL speaking. So we're not quite in a situation yet. But I would say with it rallying back up in the European session, we've seen the European session kind of drive this one. And again, the analysis we looked at yesterday was we wanted to be low to take it long. It happened very, very fast. And then again, starting at the kind of when it closed, we were sitting back in this level. Get those new prints. We were in the green area. We're in a level. A call spread would have been a nice little situation here. You would have been able to get 60, 70, cents out of it to the top side. So I think levels we still need to watch out for. Obviously we have the green arrow up here. This is the last time we saw major selling coming in. I think if anything, this would be kind of a target to the top side. I don't know if I'd be willing to kind of roll it. There'd have to be some type of a catalyst for this to go higher. But that's definitely one area that I would look at. And then again, this level down here, and we can adjust it slightly. You could probably move it down to, shrink it down to this level here. So 57.59 or 57.60 if you want to make it easier, to 57.22. That small kind of range down there. And right now, unfortunately, we're sitting right in the middle. So we'll see if we can get some movement right ahead of time. But I'll tell you right now, if the report does come in where it is a higher, supply than what we expected, and the manufacturing number is not great, this could definitely roll back to the downside. So it's one of those. It's more set up for me today as a breakout. Like assuming it's not going to stay at 59.30, it's either going to go higher because the data is great, or it's going to be really, really bad. And again, the catalyst for this is again manufacturing, POW, oil inventory, all kind of boom, 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 right in a row.
And right, and it's going to be a lot coming at you fast. So
and the ECB press at 11:40. So I mean, really within 2 hours, there's 4 major news releases that are going to talk about recovery, demand, and going forward, what COVID looks like.
Yeah. So at least with oil, I wanted just to quickly go through. If you haven't ever taken a look at knockouts, one, you've got the clear knockout levels on. Where if you were to trade a knockout, for instance, if I were thinking we're going to roll over, and it's got the upper boundary of 60 and a quarter, which is, I know, up toward where Brian's got an upper range. Again, we don't know what's going to happen when these numbers come out, but if you were to take a short position, if it were to go up and hit that knockout, you'd be knocked out. And if oil kept going higher, you couldn't lose anymore. But if it were to to come lower, it doesn't touch that, it comes lower. This is that if this, then that. You could try to catch a move in oil with a knockout with very, you could determine where your risk levels are if you wanted to go short it, if you thought it were going higher and you wanted to buy it, at one of these levels. Actually, I would probably want to look for one where the floor is down here near where we've seen support before. And if it got down here and you were to buy it and it were to go lower, 57 and a quarter, if it went down, it would knock you out if you bought it and went down. But if it went, if we were to catch an inflection, it were to go higher. So it's a Delta One product. You're trading the price of oil, but you've got clear, distinct knockout levels where you would get knocked out for a stop loss if you're wrong, but you've got room to run if you're right. And it really is one of those ones where, as you're digesting it, now other folks like the call spreads. Call spreads very similar to the knockouts, except there's going to be a premium in the call spreads. You're not knocked out. And in crude oil, just want to take a quick peek. And we've got some different ranges in here. And you can make a determination. Again, if it were to get down here near the bottom of this range, you could buy it. If you wanted to go short one, if it were to get up in this area, you could definitely do that as well. You're not knocked out. You could trade it, but you could still catch a move in oil, either up or down, with either call spreads or knockouts. Brian, I guess I'm gonna put it back to you. We're at the top of the hour. Is there anything else? I mean, that's a lot for people to be digesting.
Yeah, there's a lot going in there. I would say there's one release that just came out at 8:30. The core durable goods and durable good orders. They were expected to be both positive by a little tiny bit. Both came in negative at 0.9 and 1.1 to the downside. So, not the biggest movers. Durable goods used to have a lot more effect versus everything else going on right now. But again, not necessarily the best number to start the open off today, with a negative number in there as far as new orders being purchased. So, that's probably going to come up, and we'll see if the manufacturing number is also weak because of those durable good orders. Because remember, Purchasing Managers Index comes directly from the manufacturers. Manufacturers know where these orders are coming from. So that's it.
All right, so there we have it. Today, what you want to be looking at, NASDAQ, with Powell testifying at 10 a.m. Eastern. Some levels there in the NASDAQ to keep an eye out for. Oil also, with oil inventory reports at 10:30 Eastern. Places to keep a lookout, potential hotspots in the markets for some moves, and you can do so in a defined risk reward way with either binary options, or if you wanted to use the call spreads or knockouts, there's some interesting levels in there as well. You got any questions for Nadex? Please email us, customerservice@nadex.com. Brian is also very accessible, support@keeptradingsimple.com. With that, Brian and I will be back tomorrow morning. We'll take a look at what happened during the trading session today, what went on last night, and we'll try to set you up with some potential opportunities or hotspots to look at tomorrow. With that, we will catch you tomorrow morning. Good luck in the markets, everyone.